Good morning again, and it's Peter Warnes here from Morningstar, and I'm joined with David Ellis, and we're here to talk about the Medibank IPO with the prospectus now being lodged. David, welcome.
Thank you, Peter.
Any surprises in the prospectus that you didn't foresee in the pre-registration report?
There are a few. I suppose on the positive side, Medibank in the 2014 year did continue to reduce their expense base, and their underwriting margin, their insurance underwriting margin, edged up a little bit, so that's positive. Yeah. On the negative, their complementary services business, so that's not their health insurance business. They lost a big contract with the Commonwealth Government, with the Immigration Department, which cost them for the 2015 financial year, $15.5 million after tax in profitability.
Right.
So they were the two outcomes.
Okay, so you've come out with a fair value now of $2.10, which is just a little bit higher than the top end of the price range, $1.55 to $2, and that's where the retail cap is at $2. The retail investors can't pay any more than that. Can you just give us some colour around, that valuation that you came up with?
Sure. Well, the basis of our valuation, we're looking at net profit growth of averaging about 10% per year for over our 5-year forecast period.
Right.
So that's pretty solid profit growth. And that leads to improving return on equity. So one of the advantages of Medibank is that it's a capital light insurance company, low volatility in earnings. So low minimum regulatory capital requirements. So returns on equity we expect to average about 21% during our 5-year period. So it looks pretty attractive. The dividend payout ratio has been guided in the prospectus between 70 and 80% payout. So that's their long-term payout ratio. That's again attractive for investors.
Right. So with the market, growing at way less than 10%, the revenue line is not going to be at 10%. So what's driving the 10% bottom line growth?
Sure, we've got modest revenue growth. They are lagging the market as far as the numbers of policyholders. So they are at the top of the market share range at 29.1%, but that is easing down. But the real earnings growth is going to come from cost cutting and cost reductions and productivity improvement. So we see that to unfold over a number of years. It won't be a massive year one event. Yeah. It'll take time, and it looks like that Medibank and the executives have been moving down this path now for a couple of years. Yeah. So their productivity improvement and their efficiency is slowly improving, and we see it'll take 2 to 3, 4 years really to be at the top of their peer group as far as productivity.
Well, they've known they're going to be privatised for a little while, and so they've put a few ducks in line, and now momentum's starting to build on the cost outside. Yes. Yeah. Okay. Now, in terms of risk, I mean, there's no investment without risk. What risks are there in Medibank, and how significant are they?
Well, Medibank, being a private health insurer, operates in a heavily regulated industry in Australia. So the government regulates all facets of the industry. So that's from the annual premium pricing reviews, and it's from the community rating, so that there's risk sharing across all the insurers. And of course, there's a lot of government, what we call incentives and disincentives, or carrots and sticks, through the taxation system that has had in the past and could potentially have a big impact in the future. For example, the rebate, the 30% rebate for private health insurance. The government changed the rules in 2012 for the high income earners, and that could possibly change again, which in the future, which could potentially negatively impact Medibank. Yep. However, there's a lot of political risk in doing something like that too. So I don't rate that as a high risk for Medibank.
Yeah. So, I mean, yes, I mean, this float is going to see a lot of investors from the retail space come on board. It's unlikely, even though politicians haven't got a lot of common sense, that it's unlikely that they're going to put them all in and then push the subsidy down, which would take profits away from Medibank and make the investment look pretty ordinary.
That's right. I mean, longer term, the government, the federal government and the state governments rely on the private health insurers to share the burden, the growing burden, the financial burden of what we as a nation spend on healthcare. So it's not in the government's best interest, to damage the business models that the private health insurers operate. So it is in the best interest of the government to ensure that we have a profitable and strong private health insurance business or sector, and of course Medibank being the largest, it leads in that regard. So I don't see really a high risk of government changes to regulatory rules, but of course it is a possibility.
All right, Dave, thanks very much. And we have a subscribe recommendation on Medibank. We'd love to see the price closer to $1.55 than $2, but we'll see what turns up through the book build later in November. Thanks, David.
Thanks, Peter.